Now we're going to start the session 2 panel discussion. So let me invite you to the panel discussion right now. And before we begin the panel discussion, let me briefly introduce the panelists today. Tae-Shin Kwon, who is sitting next to me on the left-hand side, is one of the busiest and very important person in Korea. Currently, Vice Chairman and CEO of Federation of Korean Industries. Mr. Kwon has spent most of his career at the Ministry of Finance after serving as Vice Minister of Ministry of Finance and Economy. He took position as Minister of the Office for Government Policy Coordination. Mr. Kwon was also previously appointed Ambassador to OECD and Vice Chairman of the Presidential Council. I'm sure that we can hear some useful information on Korean economy related to current global economic changes. Hye-Nam Choi, who is sitting next to me on the right-hand side, is the former CEO of KIC, Korea Investment Corporation. He is currently member of the board at Standard Chartered Bank. KIC is the sovereign wealth fund of Korea, and it will be interesting to learn the role and missions of KIC. Mr. Choi has also spent most of his career at the Ministry of Finance. After his position as Deputy Minister for the International Affairs at Ministry of Finance, Mr. Choi was posted member of the board for both IMF and the World Bank in Washington, D.C. Dong-Ik Kim, who is sitting on the left-hand side of me, is currently Director of International Financial Division at the Ministry of Economy and Finance of the Republic of Korea. Director Kim is responsible for nation's international finance operation. Some of his responsibilities include issuance of foreign currency sovereign bonds and overall administration of Korean corporate bond issue and other programs in the international capital markets. Tae-Yong Lim, who is sitting on the right-hand side of me, is currently Director of Treasury Group at the Export-Import Bank of Korea. KAXIM is one of the frequent Korean issuer in the global bond market, and I understand KAXIM has tapped the global market several times this year under the COVID pandemic environment. It would be interesting to hear the comments on the recent issues. Jung-Hwa John, who is sitting on the left-hand side of me, is currently head of Global Fixed Income Team at Hanwha Asset Management Company. He has an MBA degree at Yale School of Management. His expertise is well known in the market and has led numerous successful bond transactions throughout the recent years. Now, today's topic is 2022 Emerging Market Bond Issuance, with a focus on new strategies for bond issuance under critical issues in the current market, such as growing uncertainty of world economy and the direction of U.S. interest rate. Next, escalating U.S. and China tensions. And thirdly, impact of the coronavirus pandemic on the global economy. We think this will be an interesting discussion point for both emerging market issuers and investors who are planning for next year's activities. So let me ask the first questions to Chairman Kwon regarding the Korean economy. Okay. As you see, the intensifying pandemic in much of the country has kept negative impact on the world economy. As a result, the growth rate will not likely to return to its pre-pandemic level, probably until next year. How would you explain the current economic conditions of Korea right now, and what is your prediction for next year?
Thank you. According to World Economic Outlook announced by the IMF, the Korea's forecast of Korea's economic growth this year is around 4.3%, lower than that of US and EU. But it's because we have weathered the economic shock from COVID-19 relatively well last year. So as an average of the 2020 and 2021, South Korea's economic growth forecast is the 1.7%, higher than the average growth rate of developed countries, which is 0.4%. It's mainly coming from Korea's competitive manufacturing industry and strong exports, and also we have managed very well the impact of COVID-19. We didn't do any complete lockdown. And as a result, this first half of this year, South Korea's cost-listed companies recorded 50 trillion won in operating profit, reporting remarkable growth of 69.1% compared with the same period last year. And also, the many institutions and organizations, including Bank of Korea, the forecast predict our growth rate this year around 3%. And as the percentage of population fully vaccinated increases, and the government policy of living with COVID-19, then our consumption will come back and domestic demand will recover soon. But we need to be prepared for unexpected external and internal risk. I think maybe coming from presidential election next year, a lot of uncertainty domestically. And externally, globally, we may have a kind of supply bottlenecks. As we have seen recently in cases of the diesel exhaust flood, and then U.S.-China disputes, and then U.S. is redrawing supply chains, reducing the impact of Chinese economy and policies. So it will make some kind of the supply bottlenecks. And because of carbon neutral strategy and reduction of nuclear power plant, our electricity price may go up. And then protectionism coming from U.S.-China dispute we should be prepared. But finally, I can say, as we have overcome the 1997 Korea's financial crisis and the world financial crisis 2008 very successfully, I'm sure Korea will show very rapid recovery in coming years. Thank you.
Thank you. So it seems that coronavirus cannot attack us because we're too strong, right? Okay. Next question I would like to ask Mr. Choi. Since you have retired from KIC very recently, and I would like to ask some questions from your past experience of running the National Wealth Fund. What's the role of KIC, and how did KIC perform last year, and how is it going with this year?
Thank you for kind invitation, and also thank you for your kind introduction. As you know, the KIC is a sovereign risk fund like GIC of Singapore and CIC of China. So KI's main mandate is to manage official reserve of Korea. As you know, the total size of Korean official reserve is more than 450 billion US dollars. So among 450 billion US dollars, KI is managing around 200 billion US dollars, more than one third of official reserve. So our first mandate is to how to well manage. I mean, more focused on performance rather than stable and safe official reserve management. So I think the Bank of Korea's main focus is to maintain liquidity of the official reserve. So they manage very, in some sense, passive way and very stable way. But KI's case more focused on performance. So if we see the performance of Korea, last year it was 30.71%. And since for the last 5 years, the performance was 5.96, almost 9% for 5 years. So I think even though we are not, we cannot compete with the high top sovereign response, but we quite manage very well. And for your information, I think the last year our performance on the traditional asset, I mean the equity and fixed income, the performance return was 14.6%, which is more than 104 base point. I mean they outperformed the benchmark, which is quite well. Yeah.
So your performance was quite good, even though during the pandemic period,
yeah.
right? Let's see. Good, thank you. Okay, why don't I turn around to the Ministry of Finance, Director Kim. I know that you issue the government bond mostly every year, right?
Yes.
So does the Korean government intend to continuously issue bonds in the global capital market next year and so on?
Yes, I think we will continue to offer Korean sovereign bonds in the coming years. Existing debts will be refinanced when they mature, and new offers may be added, especially when there's no refinancing. The key motivation for us to do so is to broaden the investor base for Korean papers. Year by year, we are seeing an increasing number of high-profile SSA investors in our order books, which we feel very encouraging and we are grateful for. We believe building up a wide network in the global capital market and keeping regular contact with international investors will help mitigate our economy's external vulnerability in times of stress. Thank you.
Since you're here, it's difficult to see you very often. So I would like to ask you one more question. You've been in the market recently, right?
Yes.
And I think I've read in the newspapers that you've done quite beautiful issues this year.
Yes.
And I heard that you had issued on a very tight spread, even though in a tough market. Can you let us know that how it went, and probably you may have some magic wind how to manage that. So why don't you show it off, okay?
Okay. First, thank you very much for your compliment. But as I mentioned in my presentation, the recent tightening in the Korean spread is basically attributable to the outstanding performance and the resilience our economy showed during the pandemic. Without strong investor confidence on our economic fundamentals, this historically low spread would have been impossible to achieve. However, if the recent sovereign bond issuance has made any contribution to the tightening, I think we can name two success factors. First, we offered the euro tranche in green bonds, which was the first such case for an Asian sovereign. Thanks to the recent boom in green financing in Europe, there was a strong bidding from SSA investors in the region, which I think played a pivotal role in achieving an overall success of the transaction by creating positive spillover to the US dollar tranche as well. Secondly, we offer the bonds at a time when a sovereign can make the most of its advantages. In early October, when the issuance was made, the market situation became quite unstable, mainly due to the expectation of a tapering by the US Fed and the abrupt debt events from China. However, as a sovereign with strong economic fundamentals, our offer was received very, very well by international investors with little impact from those destabilizing factors. I think if we had chosen to go easy with an offer in early September, when the market situation was very favorable as usual, I think the contribution of our sovereign offer would have been much smaller than actual.
Did you go on for the roadshow for that issue?
No, because of the spread of the COVID-19, especially in Europe and the United States at that time, we had to do the investor meetings online.
Just
But
online.
still, we had a lot of participants and interest from the international investors.
And you've printed better than you went on the travel abroad, right?
Maybe, yeah. Basically, I think it would have been much better if we could travel abroad to see them face to face.
Because I was a little bit worried that if you can print better in home, maybe they will not allow you to go abroad. I'm joking.
Yes.
But anyway,
Yes.
you've done
Actually, yeah.
very well. Right?
Yes. Thank you. Thank you very much.
Okay. Another issue, Exim. Exim, how many issues did you go for the global bond issues last year or this year?
Well, last year we came to the market with 3 global bond issuance, and this year we were in the market 4 times of global bond, 3 in USD and 1 in Euro.
I see. And how did it went on?
Well, I think it's a good time to look back because we are now coming closer to the end of the year. So looking back, even though there was a lot of volatilities, I guess we had a pretty good year. So with regards to spread, we achieved the lowest level in our history. For example, for the 5-year paper, we printed the 5-year paper at 16 bips over 3 months LIBOR. But looking back, when it was the last time we achieved the lowest level, it was 2006. And it was exactly when Mr. Hong, you were leading the Exim treasuries. So at that time, you were the one who leading the team printed the lowest level. At the time, it was 22 bips over 3 months LIBOR. But it took like 14 years to break your record. So, and in terms of maturity, we wanted to get out of our comfort zone and do a little differently. So we printed 20 years a long-dated bond for the first time in a while. Okay. And by doing so, we were able to extend Korea's credit curve and yield curve. And also, we printed 7-year paper. As you're well aware, for Korean issuers, like 3-year, 5-year, 10 years has been traditional spot. But so 7-year was initially thought to be sort of odd and very rare in the debt capital market. It turns out to be a sweet spot for Korean issuers.
Well, thank you for your compliment. Actually, that success was supported by these two gentlemen when I was working at working with the Ministry of Finance. Now, Exim, I mean, we're under a pandemic, right? Did you get a vaccine shot?
Fully
Did
vaccinated.
you get the vaccine shot, everybody? How about Mr. Chair?
Yeah.
So everybody, okay? Now, but still we're under a pandemic, and I guess still it's difficult to go abroad through a plane, right? So how do you do your global IR?
Well, before the pandemic hit, we used to be on the road a couple of times on a regular basis. But after the outbreak of the pandemic, we couldn't do so. So we took a little different approaches. There are three ways. First, we conducted virtual IR campaigns. There are a lot of means these days like Teams and WebEx. So we fully make the full use of these means. And in the first place, we was sort of suspicious whether it will really work or not. But in the end, it turned out to be working really well. For example, only this May, we had 4 virtual calls with 2 of the central banks and 2 of the multinationals, and we saw all of them participating in our following transactions. And second, we now try to participate in as many credit conferences as possible, like I did today. My participation at the Bell today is still a part of that approach. And lastly, we've been really trying to resume physical IR once again. And luckily, we were able to do so this week. So Exim's team was on the road in New York only this week, meeting key U.S. accounts. So my boss, Director General Lee, just came back from his trip to U.S. last night.
Oh, I see. Okay. So you've just started a physical IR. Okay.
Yeah.
Thank you. Now let's turn the questions to investor Hanwha Investment, Mr. John. We've been under a low interest rate environment for 7-8 years, right? And however, due to recent tapering by Fed, seems like U.S. interest rate is slowly rising. They're also saying that in the market that continuous supply of stimulus package, and if vaccine really works effective, treasury rates may go up further. I'm not so sure, but it's saying in the newspapers. How would you see the U.S. interest rate next year?
Yeah, thank you for the question. Basically, I'm in the same line with that. I see the upside risk of U.S. rates because of the solid economic growth and the extended inflation pressure. The peak of the economic growth and the peak of fiscal and monetary policy is already behind of us. Having said that, because economic activities are going back to normal, we will see a solid recovery next year. That's my view. That might be slower than this year. However, I think that would be good enough. So we have a good chance of normalization of real yield, which is in a deep negative at this moment. Also, we are seeing the higher inflation pressure. And that inflation pressure is supported by the high wage growth and the housing prices, which are more sticky items, not temporal items. And as Mr. Kwon mentioned, the bottleneck issue is still there. So I think the combination of the solid economic growth and the extended inflation pressure would push the yields up next year. And if I mention about the impact on the portfolio, the U.S. rate rise would give definitely negative impacts on the total return of the fixed income portfolio. Well, this year we have seen about 60 basis point of yield rise of 10-year U.S. Treasury yield basis. However, we saw the credit spread tightening which has mitigated some of the loss from the yield rise. However, for the next year, there will be no such buffer because already its credit spread is on the very tight level. So it is important to aware the risk of impairment of capital from the yield rise next year. So I think it would be good to go a little bit short on duration versus benchmark, but that's important awareness. Thank you.
Now, in this kind of an environment where you see that you expect interest rate to go up, but then, still the liquidity is still, expanding. It's difficult to see a real direct what's going to be the interest rate direction, okay?
Right.
But seems like it will slowly go up, right? Now, under this kind of environment, how would you run your portfolio regarding, fixed rate bond and floating rate bond investments strategy?
Yeah, that's important. It's very tricky market to run a portfolio between the both pressure of upside potential and also the downside potential. The interest rate volatility has gone up. Regarding the, however, overall in that sense, floating rate versus fixed rate investments, well, if I have a concern on the interest rate rise, then I'm considering on the floating rate notes or low duration strategies. And I believe on a rate hiking cycle, the floating rate bonds should be a good option to preserve your capital. Having said that, because the fixed rate bonds are majority of the global fixed income market, especially on the corporate credit side, you have small set of opportunities to pursue those floating rate notes, and this would be the kind of strategy on the tactical strategy on the portfolio. I think it is good time to consider pursuing the floating rate notes with the leveraged loan or CLOs. The reason is there are a couple of reasons on it. The first reason is those are floating rate notes, so they can mitigate the duration risk. And the second reason is the corporate fundamentals are recovering, and default rates are very low at this moment. And I'm relatively confident on these risks because the households and banks' balance sheet is very solid at this moment. Last but not least, because the leveraged loan and CLOs deliver quite decent carry return, it could give you a good buffer, even if your predictions on the rate goes wrong. So even if the rate goes down, you can yield some of the return with a decent carry return.
Thank you. It's good explanation. Okay. Right. Now let's go back to the prime economy. Chairman Kwan, with regards to the U.S. presidential election, Biden has been elected, and it's already been 10 months since he started his position. Okay. How well is our economy getting along with the U.S. nowadays, and is there any change or impact to the Korean economy after the new U.S. leadership change from Trump to Biden?
I think Korea has maintained a good relationship with U.S. for a very long time, because Korea was the only and first country of U.S. diplomatic policy has succeeded, because within the 50 years, Korea has achieved full democracy and also miracle of economic development. So that's the success of strong U.S.-Korea ties. So when U.S. was ruled by President Trump, there was kind of unpredictable issues, a lot of risk issues. And then the America First and unilateralism and the one-way story. But after Biden came in, I think multilateralism and rule of law and globalism has come back. In that sense, Korea can continue to have good relationship with U.S. And U.S. trade with U.S. topped $126 billion this year, up by 29% compared to the same period of last year. And our foreign direct investment to the USA has gone $10.3 billion in the first half of this year. It's the big share of our total foreign investment. And then recently, November 9th, Federation of Korean Industries had a regular annual business council with U.S. Chamber of Commerce Industry by Zoom remote. We did it in our office together, and we have discussed a lot of issues, and then we also raised the issue of the revision of Section 232 of United States Trade Expansion Act. And then we have a lot of good responses there from U.S. side. And good thing, the recently Biden administration passed the $1.2 trillion infrastructure package bill, and then they will build not only traditional infrastructure such as roads and railways, but also high-tech and environmental friendly issues like broadband, electric vehicle stations, and Korea has competitive strengths in these areas because of semiconductors and secondary batteries. So there are a lot of room Korea can contribute in this area. And also U.S. is trying to redraw the supply chains to reduce the impact of China. It's mainly ally-oriented supply chain restructuring. So in that sense, we can have a competitive edge against the Chinese products. So I think all in all, we are in better shape than before with the U.S.
I see. What about the recent, U.S. and China tensions in the market? It seems like it's escalating. Okay? What kind of impact will Korean economy face under this kind of environment?
I think U.S. and China is about 25%. Our export goes to China. China is important to us. But also USA is more important to us, not only economically, but also diplomatically. But the problem of China, when I was Korean ambassador to the OECD, all the advanced country ambassadors and governments discussed that even though China is the second largest economy in the world, it doesn't behave like an advanced country or number 2 country. It's more or less very much dominant and aggressive. And then it's, even though it's a member of WTO, it doesn't bother to follow the rules. So as we have seen THAAD case, and then as we have seen recent the diesel issues. But so in that sense, protectionism and then the less trade-friendly issues will give bad impact to Korean economy. But we need to overcome it because we have comparative advantage against the Chinese products, but also we need to maintain the good relationship with these both 2 countries. So this is a very difficult issue, but which we cannot manage.
Yeah, It's difficult, but we have to manage, right? Okay, thank you. Let me turn to Mr. Trey. Since you've been with the KIC for quite a period, and I heard that the recent performance of KIC was pretty good, right? Even under the pandemic environment. Now, when KIC invests, investing, issuers actually they don't worry about that much. They just issue. But for an investor, you have to carefully look into the risk, and you have to look into the yield as well, right? Whether that suits you or not. So, in that circumstances, how does KIC manage the yield between the risk?
Thank you. For bond investment, you have to care about the various factors like the currency and also the size of the issuance and the credit rating and maturity and liquidity. Those are all important factors. But I think when it goes to returns, I think the maturity and currency are the most important, given quite so long to low interest environments. So, but you are given the kind of monetary normalization situation. The U.S. Fed already announced they're gonna tapering out. Next year they might hike interest rates. So we have to think about how to manage our risk. Also, we have to care about the returns from bond investments. So saying that, especially the yield volatility in short-term bonds, which are relatively more sensitive to changes in monetary policy, is expected to increase, obviously. For long-term bonds, I think the rise will be limited considering inflation and economic expectation. Given bonds yields are historic lows, the FX factor now has greater effect on overall fixed income portfolio. So we might expect that next year, given rate monetary price normalization, the case of dollars, its strengths when there is a spike in volatility in financial market and global economy slows down, and two, economic growth mainly driven by the United States. Then we have to think about the dollar gonna be continue to be strong.
I see. Thank you. So we've got a lot of things to do to take care of the safety as well as the yield, right?
Yeah.
Okay. Let me turn the questions to an issuer. Okay. Seems like you're doing quite well even during the pandemic period. Now, Exim is a frequent issuer. I heard that you issued 4 times last year. This year?
Yeah, this year. This year, yes.
This year, okay. How much do you raise overseas fund each year? What is the volume, total volume?
Yes. This year, we are expecting to be ending off with raising 13 billion US dollars.
13 billion.
Yeah, but we are now seeing more and more financing needs from corporate clients because they are doing really well in the global arena. So we see more financing needs from them. So we have to raise a lot more amounts next year. Currently expected to be $15 billion.
15. So what about after next year?
It's a tough question. We still have to deal with. So we are currently testing what would be the maximum issuance amount on an annual basis. So that is why we are trying to reposition ourselves as an SSA issuer rather than as emerging market quasi-sovereign issuer.
Right. I mean, it seems like, your overseas debt is continuously increasing, right?
That's
But then there are, Korean corporates who needs the funds, so that's
right.
why you have to raise it. But then your shoulder, is actually getting more heavier and heavier, right?
That's right. Sir.
So probably in some day, you may have to calculate what should be the maximum amount of your debt according to the ratios of your capital and stuffs like that, right?
Exactly, that's right. So that is going to be the long-term challenge that we have to deal with going forward.
So you raise funds under that environment, okay? Now, how do you see the windows next year?
Well, I guess that's a very good question because we are almost coming to the end of this year, and we've talked about that issue with a lot of DCM bankers and syndicates here and there.
Is there
And-
going to be a Christmas issue? No?
I don't think so, sir.
No,
But,
okay. Yeah.
but what I realized is the market consensus is that the earlier the better. I mean, it's not going to be as easy as it used to be because the Fed had already started tapering the asset purchases program, and there are a lot of talks about possible rate hikes next year. So they all recommend the earlier the better. So if you are thinking of coming back to market, you should do it very early. So Kexim is now gearing up to come back to the market very early next year.
Very early next year. Oh, that's a good sign to the market.
So that our investors can be prepared.
Okay. So that's the suggestions from the syndicates?
Yes, syndicates and other market professionals.
Okay. Do you agree, Hanwha Asset?
Yes, we agree.
You agree? Okay. Right. What are your views on other currencies? You're not just issuing U.S. dollar or euro. I know that Kexim, issues on other, exotic currencies as well. What's your view on that?
I guess the local currency funding market and other exotic currency markets, I guess they are showing sort of polarizing dynamics because other than U.S. dollar funding market, this is good because a lot of Korean issuers they are successfully establishing themselves in the euro markets. I guess that is partly because the MoEF they led the way, showing the where we have to go in terms of price direction and size. So we see a lot of Korean issuers they are successfully issuing euro-denominated bonds, which is really constructive and which is really encouraging. But other than euro and USD, the Korean issuers has been relatively slow in the local currency funding markets, and this is partly because there are a lot of liquidity in the USD. So the local currency funding cannot match the USD funding in terms of spread. But as we now hearing a lot about noises and certainties like rate hikes, once again tapering, I guess next year will set the stage for local currency funding.
Okay, thank you. Okay, Mr. John. Okay, how do you make your judgment when to invest in fixed rate bond or floating rate bonds? I'm asking you because the direction of the U.S. interest rate looks like it's changing. So when do you judge when to invest in fixed rate and when to invest in floating rate? And what happens if your prediction goes wrong? Okay, you thought that it will be better to invest in floating rate, but then the environment changes very quickly and it didn't match with your expectation. What do you usually do in that case?
Sure. Well, I briefly mentioned about it on the answer before. I consider the floating rate investment when I have deep concern on the rate hikes. If the rate goes up, then obviously I have a capital impairment on my fixed income portfolio. So I would think about the floating rate investment when I have a concern on it. And well, the option to go for floating rate notes, well, unless I heavily use the interest rate derivatives, which I don't, there are few options on the markets. There are mortgages and loans and CLOs, and among those assets, I prefer the loans and CLOs, and that's partly because linked with the answer for the second question. What if it goes wrong? If rate goes down or if rate goes steady, then I've got to make some return with the floating rate investments. For that case, then the investments that can make some carry return would save our portfolio total return. So that the leveraged loans and CLOs, which generates pretty good coupons and carry returns, would protect even if my predictions goes wrong. Some kind of examples can be 2017. Actually, the market yield has gone down on the first half of that year. And however, the leveraged loan total return index still showed a decent return when the rate goes down. So I have to think about a different kind of risk, credit risk versus a market risk. So the mix of it would be the alternative that I can choose with that assumption. Thank you.
Well, I know that your prediction is always right, but I was just a bit concerned, under the current low interest rate environment, what is your strategy in investing short term versus longer term?
I think we have a good chance to see higher rates and a flatter curve. The Fed may start raise their policy rates possibly late next year, which will push the short-term interest rate. On the other hand, for the long ends, which might have a different situation than the short-term rates, real money would be a technical backstop for their liability matching purpose. So they always prefer the long end of the curve when a little bit of upside of that yield. So they will buy it. So I think the long end may not increase too much. So I expect a flatter curve next year. So I think it would be more reasonable to go short on the duration versus benchmark, and the curve flattening position also very makes sense. So I have a view of some overweight on the short or intermediate maturity bonds, and lightening up some of the long-term yields position to go a bit shorter on the average duration of my portfolio versus benchmark.
Okay, that's interesting. Thank you. Now let's turn back to the basic economics again. Mr. Kwon, the pandemic coronavirus kept the consumer spending rate to decline substantially, right? So due to this incident, in order to stimulate the economy, many governments, including Korea, exercised several very strong fiscal stimulus package throughout the year. This might have caused government debt to expand to a certain level. Okay. Is this something that we have to worry, or is it something that's it can be cured quite quickly, or what?
I think we should worry about it because for the first time in our history, Korean government issued sovereign bond March 1998 when I was Deputy Director General of International Finance Bureau. And that time, our bond was very well received. At first, we planned to issue $3 billion US, but when we finished the book building, it turned out more than $10 billion demand. So we finally issued $4 billion. And the strengths mainly coming from our strong fiscal situation. Our government debt to GDP was 11% that time, 1997, while the average of OECD countries were about 43%. So they understood, the investors understood, Korean government can have enough power to solve these insolvency issues of corporate sector. So as a small country, without natural resources like oil or diamond or uranium. And then as a country far away from the center of the world, and then our land is very small, and about 70% of our land is the uncultivatable, the mountains. So the only thing we have is our good management of human capital, and then the financial fiscal situation. So government debt to GDP ratio is very important to us. According to budget proposal for next year, Korea's public debt will amount to more than $1,068 trillion, which makes the ratio over 50.2%. So as many countries, the advanced country like Germany or Belgium, Denmark, Sweden, FKI, we are planning to invite 4 countries ambassadors this afternoon, 2 p.m., to discuss how these, frugal countries, which their prime ministers announced, we should go back to strong and healthy fiscal situation this year. So FKI invited those ambassadors and then learn how they manage it. So in that sense, I think we should be very strict to maintain good fiscal situation, because once you spend too much, you cannot go back. But somebody say USA, Japan, their government debt ratio is 200%, it's okay. But Korea is different. Korea, our key currency, Korea won is not key currency. So once, as we have seen 2007, even though we didn't do anything wrong because of the US started the financial crisis, then all the money went out. So we should be very careful to maintain the strong fiscal rules. And to do that, we should make Korea grow faster, and then a lot of investment by private sectors, which can create jobs and create money. Then the burden of government debt will be reduced.
Thank you. Yeah. So we'll have to do a lot of things before we can reduce the total debts. Probably it's not only Korea, but quite many countries in the developing countries as well, right? Even the developed countries. Okay. Now,
but every time U.S. is tapering and then reducing the money and increase interest rate, the weak developing countries have the kind of a fiscal or financial crisis. We should be prepared for it.
Yes. Now let me turn the question next to Mr. Che. Well, pandemic is still there, and it looks slowing down, but on another hand, it looks like intensifying in much of the country. It's not slowing down. In this kind of an environment, does it give any impact to investment of KIC abroad or not?
Obviously, the pandemic affected the management of KIC assets. But even though before the pandemic, there was obviously a structural shift in our life, which is the digital transformation. Given the pandemic situation, people more adjust to such a big change. So digital transformation became the hot topics. So given such a situation, KIC tried to increase the weight of the future industry. I mean AI, also kind of many IT technology. On the other hand, the alternative assets, we also try to focus on the industry which enjoys the pandemic situation, like the digital, the data center and telecom tower and storage kind of thing. So obviously the pandemic affected the focus of the KIC investment strategy.
Well, interesting to hear that you're also using AI. Very interesting. Now, what would you consider most for your investment under the current economic environment, like currency size, rating, maturity, or liquidity? What do you think you consider most for the investment?
Previously, I briefly touched on the question, but given such a monetary policy normalization, I think the currency gonna be the most important and powerful factor which affect the performance of our investment. So we have to be very careful about the trend of US dollar movement. So. But we already know that there is, given such a monetary policy normalization, US dollar going to be strong. But speed and magnitude is quite important. So we also, I think that they're going to closely monitor those kind of monetary policy and macroeconomic situation.
Thank you. Mr. Kim, sovereign, you mentioned that the Korea's sovereign credit rating is still healthy AA, right?
Yeah.
All Moody's or Standard & Poor's and
Fitch,
and
AA
Fitch.
minus. Yeah.
All three are AA, right?
Yes, that's true.
Now, do you see any future change due to the pandemic environment, whether that affects our credit ratings in the future?
Yes, as was mentioned before, there has been an increase of fiscal deficit during the pandemic. So I think there is some concern about the credit rating, sovereign credit rating, also because as the result of the deterioration in fiscal soundness. But I think, as I explained during my presentation, compared to other countries, our government's fiscal stimulus was very cost efficient, and also the effectiveness of those policies was also better than other economies. So if you consider that, I don't think the fiscal concern would be the direct cause of any credit rating changes in the near future. So, in other words, I understand there's a little chance of any change to our sovereign credit ratings. So basically, this is because our economy fared very well during the pandemic compared to other major economies. And also, a senior manager from a credit rating agency. We recently met in London. She even mentioned that Korea is one of the few economies probably not to face any economic scarring. So their evaluation on Korean economy is that high. That was the feeling I received from the meeting. And also, looking in the medium term as well, I understand the credit rating agencies have a balanced prospect between upside and the downside factors. So it seems they see, as I mentioned earlier, fiscal sustainability and also population aging as a downside risk, but possible productivity gains, which will come from our government's innovation drives like the Korean New Deal, and also potential improvement in South-North relations may be viewed by them as a countervailing factors.
Well, so seems like, we're quite stable. It seems like we can still maintain the AA or probably AAA.
So what I hear from the credit rating agencies is Korea is in a unique position because of the South-North relations. So one of those rating agencies are downgrading one notch because of that factor.
Yeah.
So actually, if we do not count that factor in, our sovereign credit rating is very close to AAA. That's my
I think time is almost up. I guess investors abroad would wish to listen to this panel a lot more. Maybe we have to spend 2 or 3 hours, but unfortunately we have to stop here. Okay. Why don't Mr. Kwon make the last comment that since Director Kim of Ministry of Finance said that we're not in a shaky environment and we're still keeping AA. So can you make a comment that Korean economy is still quite strong and promising?
We have proven track record that the many investors who invested in Korea always succeeded. So even though we have ups and downs, we have some problems, Korean economy is very resilient. And then we have smart people, and then the upgraded technology, and then very innovative young people. So you can believe in Korean economy and Korean people.
Okay, thank you. Thank you, everybody. We hope the presentation and the panel discussion today was informative. As I said, if you have any questions, send it to us and we'll be pleased to deliver the answers via email. And if you wish to contact the arrangers and the issuers, there are contact information in the brochure. So please take good care and hope the pandemic ends as quickly as possible. We wish to see you again at the next forum. Thank you very much.